When was the last time you stood in a long queue at a bank to withdraw cash? That seems like a distant past, is it not? Technology has definitely reduced our carbon footprint by cutting down our visits to banks. But it is not just commercial banking that has undergone a sea change. Let's look at the state of investment banking in India. For more than 3 decades, the investment banking activity was mainly confined to merchant banking services such as providing advisory to clients on financial, marketing, and legal matters. Foreign banks were the forerunners of merchant banking in India. The erstwhile Grindlays Bank began its merchant banking operations in 1967 after obtaining the required license from RBI. In 1972, the Banking Commission report asserted the need for merchant banking activities in India and recommended a separate structure for merchant banks totally different from commercial banks' structure. The merchant banks were meant to manage investments and provide advisory services. SBI set up its merchant banking division in 1972 and the other banks followed suit. ICICI was the first financial institution to set up its merchant banking division in 1973. The Indian investment banks depended on issue management, which involved raising capital from the market to a greater extent. However, they had to perish due to the primary market downturn in the 90s. Primary market is a part of the capital market that deals with issue of new securities. The bigger industry players were the only ones to survive. Lack of institutional financing to fund capital market activity washed out the smaller players. The lack of depth in the secondary market, especially in the corporate debt market, could not supplement the primary market for any major development. Let's now explore how the investment banks that have evolved over the years is structured. The regulations do not permit investment banking functions to be performed by a single entity for 2 reasons: to prevent excessive exposure to business risk and to prescribe and monitor capital adequacy and risk mitigation mechanisms. Commercial banks are prohibited from getting exposed to stock market investments and lending against stocks beyond certain specified limits under the provisions of RBI and Banking Regulation Act. Merchant banking activities can be carried out only after obtaining a merchant banking license from Securities and Exchange Board, SEBI. Merchant bankers other than banks and financial institutions are not authorized to carry out any business other than merchant banking. The equity research activity has to be carried out independent of the merchant banking activity to avoid conflict of interest. Stockbroking business has to be separated into a different company as it involves membership from a stock exchange besides SEBI registration. Let's look at the regulatory framework for investment banking in India. All investment banks incorporated under the Companies Act, 1956 are governed by the provisions of that act. Those investment banks that are incorporated under a separate statute are regulated by their respective statute, for instance, SBI, IDBI. Universal banks that function as investment banks are regulated by RBI under the RBI Act, 1934. All non-banking finance companies that function as investment banks are regulated by RBI under RBI Act, 1934. SEBI governs the functional aspects of investment banking under the Securities and Exchange Board of India Act, 1992. Those investment banks that carry foreign direct investment either through joint ventures or as fully owned subsidiaries are governed by Foreign Exchange Management Act, 1999 with respect to foreign investment. Let's look at the major players in the Indian investment banking industry. Several big investment banks have set many group entities in which the core and non-core business segments are distributed. SBI, IDBI, ICICI, IL&FS, Kotak Mahindra, Citibank and others offer almost all of the investment banking activities permitted in the country. The long-term financial institutions like ICICI and IDBI have converted themselves into full-service commercial banks, also called universal banks. Certain banks like Canara Bank and Punjab National Bank have had successful merchant banking activities, while some other subsidiaries have either closed their operations or sold off their business due to a couple of securities scam in the industry. There are also merchant bank structures, non-banking financial company, NBFCs such as Alpic Finance, Robo India Finance Limited and so on. Some of the pure advisory firms that operate in the Indian market are Ernst & Young, KPMG, and PricewaterhouseCoopers and so on.